Hi, and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at that most recent price action on the 1 hour, 1 day, and 1 week timeframes. As I get into today's video, if you do find it useful and informative, smash that like button. Really do appreciate that. Help spread the content to more like-minded individuals. If you're new to the channel, why not consider subscribing? You'll stay up to date with all the videos that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is down in the description below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into today's video, kicking things off with that 1 hour time frame. So here we have BTC paired up with USDT using the BitGet spot exchange. Now, on here, we can see that we are still looking for our fifth wave low, which is actually a part of our wave 3 low point. Okay, this is using Elliott wave theory. I know it's a little bit more of a complex structure, but I'll just quickly summarize this for you. Basically, when you have a 5-wave move, each of these are typically going to, in fact, typically will include a 5-wave structure. There's different types of 5-wave structures that could sit internally within, but for the most part, we're going to keep it nice and simple and kind of show you that a 5-wave count like this bigger one here, let me actually move it out of the way, is made up of smaller 5-wave movements, okay? And so realistically speaking, that's kind of what we're tracking here. We have the 5 waves coming down inside the wave 3. That's kind of where I think we are. And it could be possible that we just haven't yet finished the wave 4, okay? So we can still see this coming up a little ways. We have a double top situation at the moment. So we're still in the wave 4 in my opinion, and we're still heading down at the moment because it hasn't changed. It hasn't gone up higher. We're 26,290 to 26,443. Okay, so this is still very much in play. I think this is actually where we are right now. Okay, so we're waiting for that one to play out. This is a part of a big wave 3. Once that plays out, then we'll have another wave 4 and another wave 5 to the downside, as you can kind of see here. Okay, so we're right on track on our hourly chart for this. We haven't broken out of it in any way, shape, or form. In fact, the only way to really break out of this particular pattern is for us to breach the wave 1 high, which currently comes up at about 27,300 and basically $27,341. Okay, that's the invalidation. Wave 4 is not allowed to cross. So until that happens, we have to expect still bearish situation to be in. Now, we are in a bearish structure according to smart money concepts as well. We can see that here. So we're still looking for further downside ultimately. We're overbought on our hourly chart, so we can see momentum shifting back to the downside before we start to see any significant moves up. So for now, yeah, this is all pretty much on track. We are basically fighting the 50 EMA and the 50 SMA, with the 200 EMA being much higher in price at the moment on this 1 hour time frame. Let's take this out towards our daily, because this is essentially building up into our 5th wave movement. As you can see, our target for our daily chart is at 22,477 to 23,787. This has not changed for quite a significant period of time. As you can imagine here, what we're doing is we're tracking the 5-wave structure, right, of this 5th wave movement on the daily chart. We are essentially doing the or trying to complete the wave 3 of the wave 1 of the wave 5 on the daily time frame. A little bit complex, I know. It can be a little bit to get your head around when you start thinking about all these nested positions, but essentially here we're inside the 5th wave movement, and on the daily time frame inside there we are essentially tracking wave 1, and if I draw this in and I keep going down even deeper, I can't do here, we are essentially inside the little wave 3 here, essentially, of the wave 1 of the wave 3. There's a lot to kind of get your head around. Let me go ahead and just move those out of the way so you can kind of see this a little bit clearer. We are, in my opinion anyway, inside the wave 3, okay, of this wave 1, which is of this wave 5. Okay, so it's a little bit complex, but it is what it is, and that's kind of where we see ourselves right here. And again, we got close to breaking out of this structure, but we failed to do so. The breakout situation would have been 28,588. We didn't have that, so essentially we are still breaking down towards our target lows. So nothing has really changed on our daily time frame. We've obviously pulled back towards the target range rather than the invalidation line at 28,588. We are between the 200 EMA, which currently sits at $27,014, and the 50 MA moving average at 26,637. So we're just sandwiched right in between those two, and essentially this is where we sit with this one. We are waiting to see whether or not we can break out. I don't think we will just yet. We have to complete that fifth wave movement on our hourly chart. To complete that, then we bounce up, and we have a good stab at moving back towards 27.5K, finding that upper area of resistance, probably around the 27,700, and then going back down. And the next move will be pretty big. It will be still talking about breaking that existing low at 24,600. Again, it would be made up of another 5-wave movement. So we'll be looking at, another kind of 5-wave move in here that will basically breach that low. And then, of course, we'll be right on our target range to complete this pattern now. Now, this pattern of a 5-wave structure is bearish because if I come back over to some blank space here, we have a 5-wave pattern. You can't just have 5 waves on their own. You would, of course, correct up in a 3-wave pattern, and then you'd have to drop back down in another 5-wave pattern. Okay, they call this a zigzag pattern. It's a 5-3-5. 5 waves down, 3 waves up, 5 waves down. And essentially, that's kind of where we sit. This would be a technical term of an ABC. As you can see, ABC here would be also a zigzag pattern in this example, but doesn't have to be. We could, of course, use a W, X, and Y to symbolize a different kind of internal structure, but you kind of get the idea. It's a 5-3-5 correction. It's called a zigzag pattern, and in simple terms, that's an A, B, and C pattern. So what we see here for Bitcoin, if we haven't broken out and if we fail to break out, is a 5-wave move, which means we'll move up in 3 and then back down in 5, and we'll probably be hitting $20,000 in that particular scenario. So we want to keep that in mind, okay? So things are not looking great unless, of course, we can rally higher than 28,588 and break out of this pattern. Okay, as simple as that. So moving over into our weekly time frame, what do we see? Well, this is Bitcoin paired up with USD, and we're using the Bitstamp data on the 1-week time frame. This is an interesting one because, as I was talking about on the Cheeky Crypto Uncensored channel yesterday, last night, was essentially we have this curvature line here. Okay, you're connecting all those low points together in the same way that you connect all those peaks together, you end up with, well, a pretty level distance, I guess, between the troughs and the peaks all the way through Bitcoin's history here. And if that is the case and it were to continue, then down at this lower end, we're likely to see a potential $10,000 BTC. Now, I know that's been a while since people have been talking about $10,000. People still believe that that's likely to happen. And, well, if we are to test our trend line here, that basically starts from all the way in 2011 through to the most recent touch point, which was in March of 2020, then we would potentially be looking at $9,500, $10,000 BTC. Now, this would be about $11,000 USDT, but from a USD point of view, it would be about $10,000. That deviation is literally just on the price actions and the exchanges that you're using, and of course the pairings. But when we take a look at it from a USD point of view, then this is kind of where you're looking. Now, if history does tend to repeat itself, then this particular crash that we saw in the pandemic of 2020, there could be some kind of catalyst here that brings us down into this kind of low range. Now, that could be so many different things. There's so many things going on in the real world right now that can essentially do that kind of structure and can kind of push the financial markets and risky assets into those low points. You kind of just pick one. There's so many, right? So there's no guarantee that that happens. It's something that we do need to be very mindful about. And how Bitcoin reacts at $20,000 from our daily chart is going to be very, very key in seeing where we think things are likely to go on that kind of medium to longer term picture. Now, we all are hoping that, essentially we're going to find ourselves with a nice big move to the downside, not a new lower low, but just a nice healthy correction at maybe $20,000, $17,000. And then we're off to the races to the upside where we start a new bullish market, right? That's kind of what we all want to kind of see. Some people probably don't even want to see the healthy correction, but I think that's an inevitability. But ultimately, next year, everyone is kind of hoping and pinning their hopes that there's going to be a bullish market. But devil's advocate would be, what if we don't? And if we don't, then of course we are in this for a lot longer than maybe people were kind of initially expecting. And that could be very disastrous for many retail investors. So I'm very mindful over a potential theoretical low point of around $10,000 on BTC, maybe even potentially lower. But okay, until we see kind of, how price reacts at $20,000, it's a long shot in my opinion as well. So we're mindful of it. It's a possibility. It's technically there. We can see see it. However, I think it's important that we reflect on what is happening, kind of, week by week, and where we currently sit, and whether or not the $20,000 level is sufficient level and low enough for us to find significant amounts of demand to keep Bitcoin from tumbling any further. Let me know what your thoughts are on all of that down in the comments below. I'm going to wrap this video up right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.